Happy 2023, Super Savers. I hope you're kicking things off healthy and well. So, financial goals. What better time to talk about this than today? Because what's one of the first things folks do in the new year, besides nurse a hangover? They make New Year's resolutions. They set new goals, including financial goals. At the same time, articles similar to these start to abound about how most of these New Year's resolutions, these goals that we're so gung-ho on making a reality this year, are doomed for failure. Hopefully, we super savers may have a better track record at living up to our financial goals for the year. So in today's video, I'm going to give you 6 possible financial goals to start with, offer 4 tips that may help you succeed in 2023, as well as share my financial goals for 2023. Let's dive in, my financial friends. Let's first go through 3 slightly supercharged financial goals for those in our community who are either advanced super savers, nearing retirement, or already in retirement. And then we can dive into 3 starter financial goals for those of you who are just starting your super saver financial journey with us. 1. Top up your emergency fund. If the past 2 years have taught us nothing else, it's that we should all have money stashed away for a rainy day. With the 2022 inflation rate expected to top out at around 7%, nearly everything in our life costing more, and a potential recession in the horizon, now's the time to check in on that emergency fund if you haven't done so already. Regardless of whether you have a 3-month, 6-month, or 24-month emergency fund, make sure that there's actually enough cash there to cover you for the period that you want. Because with prices where they are currently, what was enough for 3 months, 6 months, or 24 months just a year ago may not be enough to cover the same period of time now. And generally speaking, January is a good time to revisit your budget if you didn't do this already at the end of 2022. See what adjustments need to be made. Check where you might be able to cut some costs, and also how you can throw some more cash into your emergency fund or possibly even your retirement savings and or other investments. 2. Find higher yields for your cash. Whether it's excess cash in your emergency fund or just money that you don't want invested in the volatile market right now, there's no reason why that money should be sitting in an account at a high street retail bank, earning next to nothing. So seek out higher yields for that money. With most online high yield savings accounts paying above 3% at the time of this taping, I-bonds at 6.89%, and T-bills hovering at near or above 4% depending on the term, plus further rate hikes projected for the rest of 2023, there are a number of places where you can stash your cash safely right now and still earn a decent return. 3. Watch at least one of Jennifer's videos every week. Hey, it's New Year's. I had to throw that in there. Let's just say financial goal number 3 might help you reach financial goals 1 and 2 a bit quicker. Because, well, I'll be getting back to T-bills, bonds, and more after today's inspirational goal-setting exercise. So what are your financial goals for this year? Drop a comment below and let all of us know. Maybe you'll inspire someone else to do the same as you. This section is for folks who are at the beginning of their super saver financial journey. If that's not you, feel free to skip ahead. I've included timestamps below. If that is you though, do note that I've organized these 3 financial goals in sequential order. So if you've already ticked off the first one, move on to the second one. And if you've already ticked off the second one, move on to the third one. 1. Build a 1-month emergency fund. In my mind, having at least a 1-month emergency fund should be the first step in nearly everyone's financial journey because emergencies happen. Cars break down, houses need repair, people lose their jobs, especially during economic downturns like the one that may hit us this year. Having at least a 1-month emergency fund ensures that you don't have to reach for that high-interest credit card when something unexpected happens and dig yourself into an even deeper financial hole. 2, max out your company retirement match. It's not often in life that we get something for free, and your company retirement match, if you have one, that's basically free money for retirement, and retirement is expensive. Over $1 million expensive according to industry experts, and that's at current prices. Check out our retirement playlist here if you want to see how much this free money from your company retirement match could grow to over several decades and which retirement account might be best suited for you. 3, pay off your high interest debt. If you've already checked off financial goals 1 and 2, great. Then this is the one that you need to work diligently on. And high interest debt for most of you will be credit card debt. As the Fed continues to hike interest rates this year, the interest rate that credit card companies will charge you on your outstanding balances with them will also go up, which means you'll be handing over even more money to them if you don't start paying down that debt. So if this is you, pay down that credit card debt as quickly as you can before rates inch up even higher. So now that I've laid out some possible 2023 financial goals for you, let's talk about what you can do to increase your chances of success at achieving these goals. 1, work on no more than 3 goals at a time. That's why I only listed 3 financial goals for the advanced super savers and 3 financial goals for the starter super savers. Because based on our experience, when folks try to target more than that, things start to fall apart. They tend to end up neither here nor there. It's like the clown that tries to juggle too many balls at once. When one ball falls, so do the rest. And if you're new to financial goal setting or have never saved more than $100 in your life, start with one short-term financial goal first and then move on to the next. Don't drown even before your financial journey has started. 2, make your goals specific, measurable, and with a timeline in mind. So for example, cut expenses or start saving for retirement don't quite meet the bar as far as good financial goals. I mean, you could cut your expenses by a dime or $1 and call it a day. Every little bit counts, but that won't get you very far in terms of wealth building. To make those 2 goals that I just mentioned specific, measurable, and with a timeline in mind so that you'll have a better chance of achieving them and getting to where you want, you could rewrite them in this manner. Cut expenses every week by $20. Save $1,040 this year. Or put $541.66 every month into my Roth IRA. Max it out for 2023. If you're age 50 or over, that $541.66 every month would go up to $625 every month if you want to max out your Roth IRA contribution in 2023. Now, those rewritten financial goals are specific. They're actionable. You know the amount you're supposed to be putting away, when, and what the end result should be. And every week or month, you can check in on your own progress to see if you're on track or whether you need to do more or less. 3, adjust your goals as needed. Listen, most of us do get off track sometimes, miss our target. The important thing to remember when that happens is to get back on track. Didn't save or invest as much as you wanted this month? Then save or invest more next month. Don't just throw in the towel. Also, keep in mind that seasons change, life changes, and so do your financial goals. As you move through your financial journey, make sure to update your financial goals as well and keep moving the bar higher for you and those around you. 4, find an accountability partner. That's why people get trainers, coaches, and sometimes financial advisors, because you make more progress when you have someone who supports you, someone who makes you accountable, someone who pushes you back on track when things don't go as planned. It doesn't matter who makes you accountable. Just have someone or some community that does it. Maybe for you, it's a family member, friend, or coworker, or maybe it's our community here. I can't answer everything on this channel and my emails anymore. I still have emails from September of last year sitting in my inbox, but I'm always impressed by how all of you super savers try to help one another with your knowledge, comments, and answers. I really only have two. The first one is to grow our YouTube Super Saver community to 100,000 subscribers by fall 2023, which means a lot more super saving and investing videos. I'd also like to use this opportunity to thank all of you for watching my videos and for posting your comments, but also for sharing our channel with your family, friends, and coworkers at every chance you get. Words can't even express how much I appreciate all of you. And the second one is to reopen our personal finance course, Fast Track Your Financial Journey, so that I can get some of you off that waitlist. So, what do you think of my two financial goals? Specific, measurable, and with a timeline in mind. Or, all right, super savers, thanks for spending the start of this year with me and looking forward to another amazing year ahead. And as always, if you enjoyed this video and learned something new, then don't forget to share this with those you care about. And of course, to hit that thumbs up, and see you again very soon with another brand new wealth building video for a brand new year.